How does the great state of Connecticut, the nutmeg state, tax income of $60,000 in retirement? That's what we're going to talk about here today at the Heritage Wealth Planning YouTube channel. So folks who are interested in the great state of Connecticut, stay tuned. You'll want to see what we talk about and how much it's going to cost you. So if you like what you see here, as always, subscribe down below. If you do subscribe, don't forget to hit the bell, the little bell up there, to be notified for future content, because man, oh man, we do lots of videos here and you want to keep up. All right, so let's dive right into it. We're going to go over the great state of Connecticut here. As always, we start with the Heritage Wealth Planning. This is my website at heritagewealthplanning.com. You'll see the wonderful visual of the island I was raised on, Peaks Island, and you know you're in the right place. There's lots of different heritages out there. Heritage Wealth, Heritage Planning, Heritage this, Heritage that. We want heritagewealthplanning.com. All right, so then you go to Tax Tools on the top right. You go to Interactive Tools, and it'll take you to this link. This is the taxfoundation.org. They allow us to use their federal tax tool on our website, which is nice, but we're going to bypass that right now. You should use it by all means, but right now we're going to go to State Tax Tools, which is a smartasset.com. All right, smartasset.com. And we're going to go to Connecticut, which I believe is right there. Yep, Connecticut. So let's see what we have here. I got my trusty little calculator with me, and we're going to dive into this now. All right. So again, the scenario is we're in Connecticut. We have $40,000 of Social Security, $20,000 of IRA distributions. We're married and we're born in 1952. So we get two standard deductions of $13,300 each. We pay nothing in Connecticut taxes. Let me write that down because again, I'm going to be putting this on my new book, the State-by-State Guide to Taxes for Retirees. So Connecticut is zero in this scenario and zero for the feds. Isn't that interesting? So even though Connecticut is not tax-free towards retirees, if the bulk of your income is Social Security, my friends, you pay no income tax. Interesting. I'm just curious to see what they say down here about there's a tax rate right there. But let's just go down here and see what they say. There we go. The best, most tax-friendly places for retirees in Connecticut. All right, so let that populate for a second. While that's working, we'll go back up and swap the numbers around. It goes 60,000. We're going to, bear with me. Oh, no. There we go. Oh, hold on. Give me a hard time here today. Okay. All right, so there we go. All right, so let's go now. We're going to swap these numbers around. We're going to go 20,000 for Social Security and 40,000 of IRA income. Whoa, that's not what I was looking for. 2 million. I wish I got 2 billion. 40,000 of IRA income. Let's see the difference here. And now all of a sudden our taxes in Connecticut go to 466 and the feds are 2871. So just by swapping that around, we go from nothing to $3,337 in taxes. Remember, this is each year. It's only going to increase because your IRA's required distributions increase as well. So as always, why do we have this? What happens here to make the taxes change so drastically? Because remember, everybody just says, oh, you're going to be in a higher tax rate when you retire, so no reason, or a lower tax rate when you retire, so you shouldn't do a Roth IRA. That's crazy talk. Really? It depends on where your income comes. So the first thing we have to figure out is what our provisional income is. The provisional income tells us how much our Social Security will be subject to tax. And so for provisional income, we take half our Social Security benefit, which is $10,000 in this case. Social Security is 20, half is 10. And we take all of our retirement income, which is, in this case, 40,000. Now, as I always say, let me make myself bigger here. If you have tax-exempt interest, that is also included in all your other income as well. So we take half our Social Security, which is $10,000, all of our other income, which is $50,000, and that gives us, or $40,000, that gives us $50,000 as our provisional income. Now what happens is, all our provisional income does is figure out how much of taxes you owe on your Social Security. All right, so 32 to 44, and then 44 plus. All right, so now what we do is we have $50,000 of provisional income. The first $32,000 is not subject to any taxes. The next amount between 32 and 44 is 50% of that amount is subject to taxes. And then 44 and above, 85% of that amount is subject to taxes. So 50 minus 44 is 12, which means 12,000 times 50% is 6,000 here. And I always forget what the 44 number is. All right, so we have 6,000. So we know for a fact, right out of the gate, 6,000 of our Social Security will be subject to taxes. 50 minus 44 is 6,000 times 85%, which I think is, I always forget, 6,000 times 0.85, which means 5,100. All right, so now we know of our $20,000 of income, 5,100, 11,100 will be subject to income taxation. All right, so let me just explain. I don't think I explained that well. Of our $20,000 of Social Security, because our provisional income is $50,000, 11,100 is going to be subject to taxation by the federal government. All right, so that's how we figured that out. The other hand, we had nothing subject to taxation because our Social Security, our provisional income was so low, even though we had higher Social Security. So we take the $11,000 Social Security plus our $40,000 of other income, makes us $51,000 of AGI. All right, so we got 11,000 Social Security subject to taxation, $40,000 of IRA distributions, which put our AGI at 51,000 or 51,100. All right, now we got to subtract that by our standard deductions, and I always forget what that is, which gives us 51,000 minus 26,600 gives us 24,400 is our taxable income. 24,400 after our standard deduction is our taxable income. The first 19,000 of that is subject to 10% tax, and then anything above 19 up until 77,000 is subject to 12% tax, and thus you get your $2,871 of federal taxation plus your $466 of Connecticut. So again, man, people overlook Social Security because they think it's for whatever reason. And I'm here to clear you of that misnomer that Social Security doesn't play a critical role, because not only does it play a critical role in guaranteed income, but it plays a critical role in reducing your tax consequence too. So let's go back. Let me minimize myself again. Places to live are in Connecticut in terms of the taxes. And what we see is, across the state. So you got number 9, which is what? The northeast port, and that's Putnam, Connecticut. Then we got number 10, which is Norwalk. Whoa, tax friendliness. All right, let's take a look. So Old Greenwich, wow, is one of the best places in terms of tax friendliness in the Nutmeg State. I can say I am stunned by that. And now what we're doing here is smartasset.com says they're going to take a retiree with $50,000 of income, which is $15,000 Social Security, $10,000 pension, a couple other sources earn income as well. And that person is going to pay $6,691 to feds and the state, which is now we got property tax rate in Old Greenwich of 0.67%. But here's a Powcatut, they got 1.16. Whoa, look at Norwalk and Putnam, 1.57. Where the Old Greenwich is 0.67. What was that about? And so right here, I'm saying, that's not tax favorable, even though it is amongst the favorite tax places to live in Connecticut. And a retirement tax friendliness, when you factor in sales tax, fuel tax, property tax, and income tax, is only 23.68. Connecticut, my friends, man alive, look at that. Now, again, the bulk of your taxes for income is going to the feds. The property tax, though, and what they're doing is they're taking the median of, we'll just use Norwalk. They're saying all the houses in Norwalk and the top 50, the bottom 50. So the median is 50 above, 50 below. We're averaging all that. We're taking the average. We're taking the median. We're taking the median property tax paid, dividing them into each other, and that's going to get our property tax rate at 1.61, which ain't cheap. That's for sure. Sales tax. They're doing some other methodology here, which is sales tax burden. You can look at that on your own. But I mean, man, that's painful. Connecticut is one of the highest tax places in the union. No other getting around that. Beautiful state, but I look at that. I mean, you're talking the number 10 of all the cities in Connecticut has a tax retirement friendliness of 23.68. Yikes. All right. Well, if you like what you see here, don't forget to subscribe. HeritageWealthPlanning.com is where you go for all this stuff. Then when you do subscribe on the YouTube channel, thumbs up, comments always welcome. And we'll see you next time. Thanks, guys.